The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to a beautiful and gorgeous day out here. And someone asked that we need to do something, and I will do it here in just a second. There we go. Anyway, having a wonderful August 31st, another beautiful day down here in Florida. Of course, we finally, one jet after another leaving, taking all the political representatives home, and we're thankful for that. We're going to the long weekend, 3-day weekend, always a chance to see the market take a turn, at least a change in attitude and if not character. Of course, today is Litigating Lawyers Day. And I tried to find 100 other things that we could have used for today, but no such luck. August 31st. If you ever come down to Tampa, it may be the whole state. I only need to see the local advertising from billboard to billboard to billboard, and you can walk on a sea of their commercials for any local television. It's all about personal injury attorneys down here, and boy, do they advertise. There must be money in it because they continue to advertise. But everywhere, billboards. And they are litigating. They must be litigating the living daylights out of everything as far as I can tell. But it is their day, so I'll give them one, and then I will crank on them the other 364 days of the year. But it just, you almost have to, especially when you go to one commercial and it's one attorney, then it's another attorney, and yet it's a third attorney, and then you come back from break on like the regular AM talk radio stations of the day. It's almost a little bit funny. Anyway, we've got a lot of stuff going on. We had squeezably soft dollar Ben Bernanke come out and do his little speech. Did his little walk on the catwalk. Yes, on that catwalk. I'll have to remember that song. Maybe we can find it during the break here. But anyway, he did a little of his dance. Of course, everybody decided to read in what they, yeah, that's it. I'm too sexy for my shirt. Anyway, he did that little song, did a little turn on the catwalk, and what did he do? People sold it off, then they bought it, then they thought he said something else, and by the end of the day, it was a Rorschach test for everybody that wanted to believe what they thought he said, when he basically said what everybody already knew, and that is, if things get really rough, I'll do more. If things don't get really rough, I'll stay at least through the election, so nothing's going to happen. Gold popped. What was it up here today? And I suspect, $691 on the Z2 contract. So as I saw, it was up 25 some odd bucks. Not uncommon to get a little pop on this. I could see the sides of a lot of people wanting to go both long and short here, because this is where gold will make a decision. I suspect that with the energy we've seen in it and in GLD, which is a good one to check out here today, we will be looking to see which way this thing is going. Some decent volume in here. We're really watching it to get through this last major high. That high had about 27 million shares on it on the, June 1st out here. And that's kind of what we've been looking into. It hopped over it and got up and went over it on 13.6 million shares on, July 22nd. What we have here really isn't giving me a lot of reassurance, because of the three highest volume days since the highest low back on, that would have been May 30th low at 148.53. You had 18 million shares down there. That has not been tested. Of course, that is part of a long-term support level. And you can see that it does go back. Let me go back here 2 years and find it. But yeah, you've got the, I mean, this thing has been kind of basing out. What I dislike about this is you've had two lower lows down here with about the same volume, which is about 19 million shares on December 29th. 2011, he got down in that same range and still had 18 million shares. And, you know, I guess you could say it came off, but that's where it really took off, was if you look at that gap, and that was on, looks like, May the 5th, 2011 out here. He had a nice gap out here at about 145. And I suspect before it's all done that we will fill that gap, and that will be the end of a very long consolidation level. If you drew a nice support line coming down, we're pretty much hitting that right now. And so, you know, I could see both a bullish and bearish case out here. I think one thing that is true, that is if you were thinking about going short here, it's probably a pretty good time to do it. If you'd been long and you'd been right, maybe not a bad chance to take some profits, or at least just put a stop under where you're at, because this thing is either probably going to turn around on Tuesday or Wednesday and come heading right back down, I think, for that about 146 level, to come back and actually test the bottom of that one last time. But it really looks like we're probably setting up for some big move in the marketplace, and I think that move is going to maybe one more level down, maybe next spring or fall. This consolidation period will be over, and that will be the next leg up into the gold market. But I could see us sitting around here for another 6-9 months, driving everybody insane, both the bears and the bulls. I suspect, though, we're probably going to try to get back in that 146 level on the gold ETF. Everybody just a little too bullish for me right now. I would have liked to see them really bullish down at the last major low, but not a lot of people even interested back there. So until we see some kind of very light pullback, I'm thinking that this is going to be one big long test back to 144, but we will know that, or 146. We will know that probably Monday or Tuesday or Wednesday when we come back. That we're going into a 3-day weekend. It is not unnatural for people to buy gold and buy crude ahead of a long weekend as insurance. So this could be nothing more than that. 3-day insurance over a long weekend for the end of the world, Armageddon, dogs living with cats, the end of humanity as we know it, trade, which is buy gold for the weekend, sell it when you come back Tuesday. So I think we'll know very much Tuesday, Wednesday, whether this thing in gold will stick. So if you're long, I could see you holding it into Tuesday, no problem. Probably not a lot of risk in that. Of course, that's why it's probably a decent trade for a Friday afternoon buy. As we go back into Wednesday and that rolls off, we'll see a lot more out here. The one thing that really bothers me is normally gold does not go up with a market that is ready to go down. If we stay sideways, some of the biggest moves in gold have been when the market just can't get going. So that would probably be one of the biggest factors, I'd say, if gold is going higher. When we looked at, crude finally ended up almost, $1.88 higher, something like that. 96.50 range. But again, I suspect that this is the trade for the 3-day weekend, which is we want some insurance. If something goes to hell in a handbasket, if the Middle East, if, God forbid we get more problems in New Orleans. As far as I can tell, of the, I think, 6 major facilities that I've heard of in New Orleans, 5 of them were unscathed and still had electricity. The other one was getting the electricity restored today or tomorrow. That they all should be operating in the neighborhood of 3 to 7 days and be back up to full strength. That still is a problem with tankers coming and going, need to drop off their loads or pick it up. But it'll probably get back to at least some sense of normalcy within the next couple of weeks. So probably look for gas is about $3.70 here. I expect gas to go up in the next couple of weeks, probably to about $4, just on the shutdowns, that kind of stuff. And then probably see a little reduce in usage by people out there in the heartland as they drive less, and of course the big weekend already, and then that'll be it. So crude really acts like at least West Texas wants to go up and hit $100 one more time, but it looks like it's got a fair amount of sellers right when we get into this $96 level. When we're looking at what else out here I wanted to check on, kind of flat on natural gas out here. Doesn't look like we've got much going on that. Apple was kind of interesting, especially in that we're up a few points. Continues to slide down a little bit. AAPL, that is, I just really didn't have any juice. And again, I don't like any of these breakouts where you don't have a good sign of strength following a breakout. And this one has pretty much filled all the pop from the the patent success that they had in the court. I think I pretty much said it yesterday, last week and Monday. That is that these patent verdicts are probably not worth the paper they're printed on. These are all going to be appealed, and I suspect eventually overturned or maybe settled for legal bills eventually. Apple itself has a lot of issues. One is Samsung is their biggest manufacturing partner when it comes to sub-assemblies like their display. I noticed that one of the problems that Apple has had, and a little of the weakness could be attributed to them not being able to make enough displays for their new display company. And was it Samsung? LG? I forget what it was. They've got a new supplier. I'll try to look it up during the break. But they've got a new supplier, and that supplier is way behind on their ability to crank out the displays that they need for the iPhone 5. They are, at least Apple is internally telling people if they want it, you better start ordering it immediately when the order lines become available on September 12th. But it doesn't look like they're going to have full production capability for the 21st, when the first day it should be available all the way through the 30th. Tonight on the Tech Insider part of the Tom O'Brien Show, there have been a massive amount of leaks for Apple and Microsoft and some of these other companies. We're going to be talking about that. I'll be showing a few of the products if you want to see what an iPhone's going to look like. I think I've got a picture of what it will be. We also have pictures of some new LG, not LG phones, Windows 8 phones for Microsoft. Pretty neat stuff. A lot of leaks last day or so. We're going to be talking about the fall and electronics.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
As we come back, we do have a phone call, so we're going to go right to that. And we are talking with Rick from Orlando. How you doing today, Rick?
I'm doing fine, Mr. White. How are you doing?
Another day in paradise here.
There you go. It's. I woke up. I was still alive. It's a great day.
Yep. I'm warmer than room temperature, which is all that matters.
There you go. Yeah, I feel my pulse. Oh boy. The way the market's been acting, it's kind of toppy. So I'm looking at one that has shown some weakness in the past. LOW, Lowe's.
Yeah, I'm pretty sure this high volume day that was about on the 20th
yeah.
was on that earnings date when they came out and said that they were losing a lot of business, most likely to Home Depot, on selling, if I remember right, selling refrigerators and washers, dryers. A lot of people were going to Home Depot instead of them. For that. And also, I think at the same time there was a little discussion about Best Buy also seeing a lot of the refrigerator sales and washer and dryer sales were weak. So they had kind of a 1-2 thing in there. So it came down heavy volume, and then everybody started buying it right back up.
Yeah.
So
I was thinking about taking a short position towards the end of the day or Monday.
I think there's probably better shorts out there. If the market turns, you're going to get the whole thing. But there's two things I dislike. You had a high volume low down here at $25.28 on May 23rd with 50 million shares, right?
May 23rd, yes.
Okay, so you got 50 million shares there. It's tested that on lighter volume on August 2nd at $24.76, 28 million shares. Okay, closed right back into that trading range. Now we're back up into the trading range that was another huge, horrible down day for them. So you had that, you basically filled that huge gap that started with that May 23rd low, right?
Okay.
It's filled it. It went back up, filled it totally, came back down, retested the high volume low again like it should. It's come back up. Your last high volume high was $28.71, 11 million shares. Over the last few days, what do we've had? 14.7 million, 11 million shares. You know, might have a little less. I would suspect that this one, as a trade, is more likely in a trading range than will fail at the next low. So I think that your trade in here, if you like it, is from $28 or whatever and change or whatever if you short at the end of the day.
Yeah.
Back down to probably $25, so, or 25, 28.
Okay, yeah, I was looking at the resistance and the volume levels back in mid-June.
Oh, yeah, I mean,
July 1.
I think you're at a top. I just don't, you know, if it was $28, I'd like to see this thing go down to 25 and then have the opportunity to get 22 or something.
Okay.
And the only thing I'm saying is you probably get your $25. There just isn't a whole lot less left below it because you've already tested that previous low.
Yeah.
So, I mean...
Okay, now I get, yes, now I captured what you said.
I don't say it's a bad short. I just, for me, I think that there are a lot of stocks out there that have tested highs on lighter volume, that have higher volume lows that can go back and get retested. This one is also the perpetual one that all the funds buy, and even when this had the horrible day that it did, they
rebounded.
They jumped right back into this thing.
Okay.
Because
so
it really has little to do with the company as so much as all these funds are buying this and Home Depot, and you know they just buy it because they have to buy it. You know, we're a little better off. We can pick and choose our fights.
Right.
We don't have to go up there and swing at the ball every time. We can stand there, wait until we get our pitch. Hedge fund managers kind of get fired if they don't do anything.
Right.
And these guys pretty much have so much money that they've got to push it around. And you know, I think they think the same thing. That heavy day came down. It was a great time for them to hop right back into it. It's already tested the previous low. And so why I don't think there's a lot higher. You know, could it get back to $25? Yeah, 25, 20.
Maybe.
But that's the $3. Yeah, there just seems to me so many other stocks out there that look like they could auger themselves back in really hard. And I think there's also a thought on the street right now, as far as the psychology, that housing may be at a high.
Okay.
But people are going to continue putting new carpet and buying new things to maintain the homes that are out there. Yeah. And these guys are probably a better bet than owning something that's been running for a long time.
Okay.
Well, anyway, I mean,
I need to get clear of one that has that much institutional stuff going on.
Yeah, I think so. Anyway,
okay. Well, thanks, David.
Thank you, back.
Bye-bye.
We will be back in a minute. You can always give me a call at 877-927-6648.
Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, as always, you can give me a call at 877-927-6648. It is a quiet day as we go into a 3-day weekend. Always a good time to reflect, think about what we're doing, and generally know that after a 3-day weekend, a lot of people tend to consolidate their thoughts and feelings, and the market comes back a little bit different. This actually reminds me a whole lot more of what the market was like in 99 and 2000, 2003 and 4, and that was just the super light end of August, incredibly light volume, and then when you came back, something actually happened. In fact, just like 2001, that was kind of like that. We had just meandering volume. Even into about the 7th or 8th, volume started coming back. Then, of course, we had 9/11. But this is kind of the way it used to be. I think maybe we're getting back to the way it was with at least some seasonal trading across the summer. I wanted to look at a few charts today. Semiconductor Holders Trust is fairly interesting, mostly because we were watching Intel. In fact, let me bring that up. I think that one actually bought. We were talking about it yesterday because this thing, I thought we were getting fairly close in the way of risk-reward in this. because you would have been beating against on, we had 37 million shares yesterday and had gotten back under the $24.92 low of 61 million shares, which is probably going to act like support for a while. What are we going to close up here today? Probably still not going to close back above that 24.92, but I imagine we could on Monday. Intel, we talked about it in reference to AMD yesterday. In fact, probably ought to pop that up while I'm looking at it. Both of these companies have seen kind of the end, and we can see the difference in AMD. It did not decide to pop back up in there today. But Intel looks like it's probably going to have a good run. There were a lot of new laptops being shown in Europe, actually in Germany. They have a giant convention hall that just goes on forever. I've been there several times trying to remember the Fughofer, something like that. Anyway, they've got just huge ability to have conventions, especially things like computers. I went there several times, but they're showing, kind of have their computer show, and Samsung was showing some really, really nice new laptops. Some of the other companies were too, but Samsung was very interesting because they're showing some of these new displays that have super high resolution. Apple's always big on not talking about spec sheets, so they call their display the Retina. And two, no one else can have the Retina display. Even if it's exactly the same thing, someone will have to call it something else, and normally you go by specs. Names are a good way to fool a public with a weak mind. These are not the droids you want. But anyway, when you get into these lows like this, just continue to see that Intel has a cat's bird seat on it, but a lot of these windows, the reviews are starting to come out from the show, which I think started this morning. I started seeing some of the reviews show up just before I left to come over here to the office for the show. But looking fairly good, but apparently both Samsung and the Nokia Windows 8 phones are coming out with super high resolution displays. There's also a fairly decent rumor that in the back rooms they're showing a 7-inch iPad, which basically has all the same internals of the current iPad, just with a 7-inch display. So looking at a lot of that kind of stuff. Apparently this little mini convention over there for computers is going to be ripe with stuff, and we're going to have a lot of that tonight on the second hour of the Tom O'Brien Show. I've got a lot of different stuff, including talking about being able to actually read someone's thoughts. Did you ever think that would be possible? We're going to talk about that tonight. And yes, the mentalist himself might be looking for a new job when we talk about some of the technology that is coming out tonight. But it's kind of some of these things are kind of first steps. In the newsletter today for the Tech Insider, I'll be talking about DNA sequencing. So one of the things that I am watching fairly closely and thinking will do fairly good, but there's a company coming out with a new product. We'll be talking about that in the Tech Insider today. Last week we talked about a lot of cool stuff also. So, when the market's kind of sideways, it's always good to use your time well, and I think I have, looking at what is going to be down the road, and not a bad deal. Anyway, we were talking about Intel. Needs about a dime to get back into this trading range. A lot of the weakness in Intel has been on a backlog of PCs waiting for Windows 8 to actually ship. One of the new things is there's a company that has we're going to talk about it tonight also, a game engine for the Windows 8 tablet. One more reason I kind of really jazzed to think about getting myself a Windows 8 tablet, the full-blown one, not the $500 one, but probably the $1,000 one with the keyboard. But kind of just about everything I want. But now that they've got the game engine, it's going to be pretty cool. So we'll be talking about that tonight again. One of the companies we talked over the last couple of days was NXP Semiconductors. The rumor starting about on this gap up on volume that was on the 7th was whether or not their near-field communication chip would be in the next version of the Apple. If you believe the rumor mill and the people taking apart the Apple products, I haven't seen a full-blown picture of a disassembled iPhone 5 yet. I've seen pictures of the iPhone 5 compared to the iPhone 4. We'll be showing that again tonight. But it looks like the rumor of it actually having a near-field communication chip is not going to pan out. And this one had been kind of pulling back. I figured this would be a good proxy on whether or not, even if it's not in the their brand is in the iPhone, would be a big push to actually get it in maybe some of the Android devices. That it's come right back into this breakout. Probably not a bad play out here if something does happen or someone does come out with one or they get a big design win. But this is one of the better looking companies out here. I think you're going to have to be extremely fast on your feet. This is not going to be an investment. It's going to be a trade, and it might be even a day trade. But NXPI, I think, bears a lot of watching. We talked a little bit about MCP yesterday. I wanted to check in on it. I'm still kind of worried about the secondary on MXP. I suspect we're probably going to go back around $10, and I would love that secondary to come back out, the stock to actually flatten out. I suspect that if they get their secondary, get a little bit of cash, that'll be the last time they need to go to the well. And with them in production, they're actually going to probably turn around and start making money fairly quickly. Of course, this is one of those companies that is going to live and die on electric cars, and because the number one thing they produce is molybdenum, or neobendium, excuse me, which is the rare earth that gets mixed with metal at about 50-50 rate, and makes those super heavy-duty magnets, the kind that the things that can almost kill you. They're so powerful. But regular iron magnets would just not give the motors for a car enough bang for the buck. Of course, this stuff will be infinitely recyclable, but the amount you're going to need for true electric car production is going to be big. So I think two things you want to be watching on this is the secondary and how well the Tesla S series actually starts to sell. I think they're kind of on the expensive range. They need to sell about 6,000 units a year. That'll probably be about 4 times what the Volt's selling now, to give you any kind of indication how well it's doing. But it's just they're selling 1 or 2 here and there. You really need something that's really a step up. I can say from General Motors' point of view, the problem is that when you build a prototype like that and you're basically investing $200,000 a car to get it out the door, you're probably ahead of the market some level, and it's going to be a problem. But I'd be watching electric car sales and any rattlings with China as far as them cutting out exports of rare earths. But you really need demand, and that demand's going to come by electric cars. And right now, pretty much everybody's thinking that cars are going to be problematic at best, even the gasoline type. I haven't looked at General Motors for a while. They did finally come out of the low and kind of pop up on a few days, but I suspect that this thing's going to be languishing in the $20 to $21 range for a fairly long time, up on very light volume here today. What else we want to look at? Facebook is another one everybody's going to be talking about. Everybody's freaking out on the financial entertainment TV shows today. I think you could probably say that it has, of course, made a new low, almost $18.08. We're going to continue seeing this thing probably slowly sell off. But I think when I talked about these what are probably known as strong hands, we talked about three organizations or people owning 90% of the lockup shares. I think they did a wonderful job. They had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days where they were actually able to pump more shares into the marketplace, stabilize the stock, try to get it as much but this is a pretty good indication of distribution. At one point, the market's just not going to take it anymore. All it took was a small downgrade from some company. I can't even, I've only heard of them a couple of times. But they came out with a downgrade to the stock. It's not down on absolutely huge volume, but I suspect we're going to see this thing probably in the $10 to $8 range, probably right before Christmas. Maybe even, it could even get down a little bit longer, but I think we're probably going to see something around the $8 mark. If you do a price to sales ratio and look at a forward PE, it could get down in there before it would get to a 10 PE. I think would be fairly interesting down there because everybody will hate it. But that might be one of these that sits around there at $8 for a year or two, having its huge consolidation, and then a really good buy on the stock as it maybe grows into its capability. Looked at IR, looked at MCP, SMHs. I continue wanting to pull out a warning on Pandora Media. I continue to see people pumping it extremely hard on the financial entertainment shows. I tend to fast forward through them with my TiVo-like box. Actually, it's a Verizon box, but of course you get to fast forward through all the stuff, so I don't pay too much attention to it. I do read the subtext though, and and you really see a lot of people really raving about it. They've really been able to turn this thing in. It's really making money, and as far as I can tell, they continue to lose market share all the time. That they can still lose just a little bit of money is a little better than losing a lot. I think at this point, anybody in social media is thinking that any of these stocks that went public over the last year, if they don't go down, then they've got to go up. This one was just heavily shorted. I don't think it's a lot different than Groupon. I think GRPN, did it make another low today? I think I saw that, yeah. Made yet another low today, and I don't see that Pandora is much different than the last big pop that we saw in Groupon. It's not uncommon to see a big 50% move in these stocks as they go down. And if you want to see how the dot-com bubble burst, most of those stocks are gone. So that's the problem. Is I wish I would have kept the data for them. You can go back and look at them. But this is just the way the end of the dot-com bubble burst. This Groupon chart looks exactly like it. You had, except maybe a few more huge moves in it. But you had 50% moves intraday, not even over 2 days. I saw tech stocks literally going from $100 to $150 intraday and closing 125. I mean, just incredibly wild, insane trading. And a lot of it was just the massive amount of new traders that put on way too much short interest stock. And this is probably exactly what happened to Groupon. Had a lot of people come down here and start shorting it at the very end, although I couldn't even find any shares to short up at $30. Maybe enough people covered that new weaker hands came in. But the path of least resistance will continue on these stocks. Groupon, probably down. I think there was an ABC down to $3.50 or something. So it's probably going to continue on down for maybe another 50 cents. But most of these companies, of course, not over $5 and certainly not over $10 are going to have big problems. Sears Holding is an example of what happens to you, SHLD, when you actually have problems staying in an index. Now, there's two problems. A lot of these IPOs were thought, well, they'll go into the S&P 500 or the NASDAQ 100, and we'll have automatic buyers. Everybody buying these ETFs have to, of course, own these stocks once they go in these indexes. We'll look at Sears Holding here and talk a little bit about what happens to these stocks when they come in and out of the index. We'll be right back and finish up the show. You can give me a call at 877-927-6648. I think you will right now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you've played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we close out the weekend, remind you that we'll be on the second hour of the Tom O'Brien Show tonight. Well, we've got just too much stuff to even get into in 1 hour. So it'll be a pretty good night talking technology. Some really neat gee-whiz Buck Rogers stuff that's come out that is actually real. So it'll be kind of cool. But anyway, we were talking about Sears Holdings. Basically, the market's taking a bet that this company is going bankrupt. At close to $85, and on the downside of that move, broker-dealers were asking for a 10 to 20% premium to get shares to short on Sears Holdings. So everybody knew this thing was going to take a pounding. They've been pretty much right now, we're now in the consolidation of this thing around $55. They found some land to sell to give them a respite, and that was the huge pop back up to $65, which was a previous gap down that had decent volume. It's kind of set this stock sideways for a while. I suspect that we're going to come back down here and break this $46, $47 level fairly soon. But it was down on fairly large volume when it was disclosed that they will be coming out of the S&P 500. And normally, because everybody has to sell, the market gets a little bit farther down than one would think it would in a stock, and it tends to pop out right after it gets out of the S&P because the selling pressure is over. So don't be surprised to see this pop. But there's a couple of reasons people have to sell, especially in ETFs. One is the charter, and if the charter says it's not, of course, in the S&P 500, they have to sell. Another one is, depending on the charter, they may not be able to be in stocks below $20, $10, or $5. So what we see in stocks like Groupon is almost a self-fulfilling prophecy that until they can get the stock back up, it won't matter. But they can't get stock up because nobody can buy them in any kind of volume because their stock's below $5. So it's a circular logic that keeps a lot of these stocks pummeled in the low dollar range. And of course, with low stock values, it's hard to acquire new talent, which means that you're stuck in low dollar ranges for the considerable future. So a lot of these stocks, you can see, continue to be in kind of this endless loop of the dog chasing its tail once they get down in these trouble stocks. A lot of times people will call these broken stocks. I'm starting to hear people say that about Facebook. But Groupon, GRPN, definitely busted. Any funds that thought about holding it, it's now into the $5 range. Probably a good bet that if you wanted Groupon and wanted to own it, forcing it down a little bit would force the hands of those that couldn't own stocks less than $5. They have to be out generally within the following 90 days. A lot of times they won't blow it out unless they actually have to. It varies by ETF and funds. So you have to almost go back through these things, do a lot of work, find out who owns them. I suspect this thing does get down into the 350 range, and probably next week. This is down on light volume, but I think it probably looks more like Facebook in the way that this thing's just going to have little gap downs and continue to gap down until it finds some buyers. But I suspect that is going to be down around $8 by the time this is all over, and another billion shares become available in October and November. Anyway, you all have a great and safe weekend. I will see you in about an hour and 20 minutes, actually 2 hours and 20 minutes, on the Tom O'Brien Show with the Tech Insider Hour. See you then.